I think first and foremost, what makes our investment opportunity unique is the current market timing.
The main reason why I think that JMS is poised and also in the right market to make a significant financial advantage for our investors is that in 2005, 2006, everybody kind of recognizes that across the entire country as being the top of the market. And 2005, 2006, the GRMs were roughly around 11 to 13. The per doors were roughly around 120 to 140 for comparable units that we're looking at in terms of the Class D properties. Currently, we're looking at properties in the 6 to 7 GRM range, and we're looking at properties in the 70,000, 75,000 per door. So if you look at those numbers specifically, we're looking at a 50% decrease in value.
We're in a unique situation where we can buy these properties for below market value, do some improvements without rent control, without a lot of the barriers that other cities have to deal with, and increase the value immediately, and then sell in 5 to 7 years when we are back to those levels.
The benefits of bringing a property from a Tier 2 to a Tier 1 from the design perspective is that I think you engender a set of confidence in the community. When a neighbor sees that you're spending the money to improve your property, they're going to try to do and like, you know. I think that, one, you're raising your property values, your neighbor does it, and all of a sudden then you set off a pattern, you know, and then you've got a cumulative gains through kind of your global community in property values.
I think the primary way that JMSred is starting to contribute to the community in general would be that we're really trying to get out there on a wide variety of bases. We have contacts with the council members. We own, at this point, 12 buildings in a wide variety of areas throughout the Long Beach market. Some are in nicer areas, some are not so nice areas. So we're moving into markets that are in the process of regentrifying themselves with the Daisy properties, Daisy and Chestnut properties. But, you know, what we're really doing and helping out with the Long Beach, with Long Beach as a city, is to help the overall city grow.
The properties performed well in 2011. Gross rent roll at the end of 2011 was $260,100 annualized, a 6.23% increase over the previous quarter and a 9.83% increase over the same period in the prior year. Applying a current market gross rent multiplier of 9.0, the properties would be worth $2.34 million, representing $219,000 in unrealized gains. We expect gross rent to increase 3 to 5% by mid-2012 as we continue to aggressively manage the properties to improve the quality of the building and bring rents up to market.